But first, I'm just going to talk about some of the craziness that's been going on in the world, in the macro markets, in the bond markets this week. Absolutely wild. So, first, I'm going to share this tweet from Elon Musk. And I just want you guys to keep this in mind um, while we discuss the next thing that we're doing. So, can you guys see that?
Yes, it is open or
So,
shared now. Yeah.
he's basically just saying initially he's got the rules of monopoly rules. What if the bank runs out of money? Some players think the bank is bankrupt if it runs out of money. The bank never goes bankrupt. To continue playing, use slips of paper to keep track of each player's banking transactions until the bank has enough paper money to operate again. The banker may also issue new monies on slips of ordinary paper. And so he's titled this tweet, How the Federal Reserve Works. And so I just want you guys to keep that in mind as we talk about what happened in Japan this week. And between the US and Japan, no major news outlets covering it at all, but make no mistake, it is actually huge. This tweet from Marty Bent on the 9th of May really kind of spells it out. So bailing out the banks is cool and all, but bailing out the central banks is even cooler. So that's basically what America has done is they've upgraded from bailing out the commercial banking sector to now bailing out central banks. Now, the reason that they did this, so I'll read a little bit into this and then I can explain the backstory of it. But the Bank of Japan, we've talked about it. We talked about it in our last episode, I believe, or maybe the episode before, has been really struggling to defend the Japanese yen from debasement for the first 4 months of this year, as the pressure of higher interest rates begins to crack the facade of 30 years of heavy monetary intervention. A couple of weeks ago, the USD yen pair popped above 160 for the first time since 1992. As the yen ran towards 160, the Bank of Japan attempted to stem the bleeding by intervening, but their interventions proved to be lackluster. The yen recovered to 52 against the US dollar early last week, but then climbed right back up to 155, where it sits about now. So the inability of the Bank of Japan to prevent the yen from running higher obviously spooked the US Treasury and the Federal Reserve because yesterday morning it announced that the US and Japan had agreed on a Forex intervention plan via a swap line through which the US will supply Japan with dollars in exchange for yen. The reason that the US is stepping up to help with this intervention is because Japan is the largest holder of US treasuries in the world. And the last thing that US needs right now is for Japan to be selling its treasuries en masse so they can get dollars to defend the yen. I imagine the conversation went something like this. Don't touch those treasuries. We'll just give you the dollars. So I mean,
Yeah.
this is insane. It's completely
Insane.
unprecedented. Not sure how long it can go on for because, but I mean, who knows? It could go on for the rest of our lifetime. It could
Yep.
unravel tomorrow. But really, as he sort of insinuated, as Marty insinuated in this article, is this isn't really the United States going, well, we love you, Japan, you're a loyal ally. There is an element of that, but it's about Japan is the largest holder of US debt in the world. And I don't even know what would happen if they started dumping it. I guess we then would move to the who would again we've talked about this before, who would buy the debt, who is buying the US debt. And at the moment, Japan they've been the main buyers. But I guess it would go to the buyer of last resort, which would be the Federal Reserve itself. So I think we have officially moved into the economic era that I'm going to call robbing Peter to pay Paul. because they really are just supporting the yen so that they do not sell their debt. And this, in essence, is, I think, if you guys remember, maybe about 4 months ago, we discussed the bond market, and I said, keep an eye on the bond market. How will the US bail out the bond market? Well, this is part of it. This intervention is part of that. And so, yeah, it's really, really interesting. As I said, completely unprecedented. The debt stack has kind of moved from the consumer to business to the banking sector to the state level, and now it's at the central banking level. So, yeah, really interesting. Wild times. Wild that it's not even being reported on any other news outlet, on any of the major news outlets, and certainly not being presented in that way. But also about 6 months ago, we were discussing like the Fed pivoting, the Fed printing money, and the printing of dollars. And I said at that time, the OG Bitcoin Zodiac viewers or listeners that would have been at that time, that they have to print dollars. Like there's no if will they. But as I said at that time, it may not look the way that we expect it to. So make no mistake, it doesn't look like 2020 when they were printing stimmy checks and giving it directly to the public. But they are printing dollars. They are printing dollars. So it's really interesting. I think it was Mike Alfred that maybe tweeted as well about this and said, basically, buckle up and hold on to your fixed assets, hold on to your Bitcoin, hold on to your fixed assets, and, just sit back and enjoy the show, I think. So let's see how that all plays out. But yeah, just remember Elon's wise words about how the Federal Reserve works. They never go bankrupt. They're happy to bankrupt you. They're happy to debase your currency, but they just continue printing on ordinary paper. So yeah, definitely a lesson.
No, 100%.